It's Thursday, April 29th, 2010. Welcome to freetradingvideos.com, D7 here. Markets pop. Check this out. Dow up 122 points. The S&P up more than 15. NASDAQ up more than 40 points. Russell's 13 points. And the VIX dropping 2.5 points. As you look across the board, we're up more than 1%, with the biggest jump on the Russells at 1.8% to the positive side. Very impressive, with a full 12% drop on the VIX. Now, no, the markets just closed. These numbers can change ever so slightly, so keep that in mind. And here we are looking at the S&P daily, and I did a quiz yesterday for all you trading technical junkies out there. Let's talk about this. I said, what type of reversal patterns do we have? We have two. Technically, we have three. So the ones that came out and said we had a tweezers bottom, you got that right. For those that said we had a thrusting pattern, you got that right. Technically, a thrusting pattern is more technically textbook correct. If there was a gap down, the white body came down a little further. But nonetheless, you can still consider this a thrusting pattern because the body of this did not pierce the center of the previous bar. If it would have done so, that would have been called a piercing pattern. The other thing that I would accept here would be a bullish Harami reversal pattern. So all three are correct. When you have three of them lined up with each other like this one, and at a little support level like this coming across, you have a pretty good chance of a bounce. So sure enough today, boom, we get a bounce, a pop, back above the 20-day moving average. Very impressive, and to see it also go above 1200 on the S&P. The problem here is we're at a resistance point right here on the trend line. And let me show you this trend line, and it goes back a little ways here. We have support, 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 and then we come up here for support, support, and now it's acting as resistance. The question is this area really acting as resistance? Maybe, maybe not. To get a clue here, we can go down to the MACD, see what's going on here. The histogram is giving us a positive tick. That means we have a crossover taking place on the moving averages. The problem with the moving averages are we are sub-zero. We're below the zero line on the histogram. The other thing that we can look at here to give us an idea is the volume. I went here to the spiders, and on the spiders I come over here and look at this price action, and I'm drawing a couple trend lines here. We broke down, and now that's acting as resistance. But the thing I really want to bring in to look at here is look at the last two major red days that we had in the last couple weeks. Look at the volume on each of these big down days. That's big money, smart money. That's institutional money selling up here at this region. Now the question is, on these up days, what's volume doing? Not as impressive as the selling volume. So look at the volume as the worth of the move. So that means the worth of the moves here, the biggest worth are on those down candlesticks. So that right there is a problem for the technicians out there that know anything about technical analysis. We know that volume confirms price action, and we don't have that. So for the markets to get bullish, we're going to have to break up above that 1230 area in the markets. If we can break above 1230 on significant volume, then these bearish signals that we're seeing all go away. But until that time, those bearish signals are a warning to each and every one of us. Be careful when you're out there in the markets. Safe trading to each and every one.